So I get a lot of questions on trading news and how to really go off with news events and potentially make some money with forecasts and everything like that, even if you are not a heavy fundamental trader. And although I personally like to stay away from news trading, I still am pretty attentive as to what's going on in the markets when these news events are coming out and if I should or should not be trading in that area. So that's what we're going to be going over today, is how to go ahead, check out the news forecast, get a little bit more acquainted with the different events that usually do happen, whether it be monthly, quarterly, or yearly. And if you are that kind of person that wants to tap into that and kind of start making some money off of that, I'm going to show you exactly how it is that I will go about doing that. So let's get into it. So as you guys know, whenever I talk about news events and pretty much figuring out what's going on throughout the week in terms of news, the different currencies and the economical standings between that currency, I always direct you guys to forexfactory.com. This is a website that I've been using honestly since the beginning of me like really starting to taking trading serious. Again, it is not the end all be all if you want to be a fundamental trader, but that is not what we're talking about today. This is more or less a beginner's guide or a beginner's, step into the whole news world and everything like that. And I think forexfactory.com/calendar gives you a very good idea of really taking advantage of that. So I talked about it in a previous video where I spoke about the 3 types of market analysis, and I kind of broke down how it is that you would look at this calendar right here, especially on a weekly basis. Today is Sunday, so the market's going to be opening within a few hours. At the beginning of the week, I always like to kind of check news to see what it is that I'm going into for the week, especially because I am a New York trader and I personally just don't like to really trade red folders. So it kind of gives me an idea before the week even starts. It gives me an idea of how many times I'm going to be trading throughout that week, because if there is a day where I see a bunch of red folders during the New York session, then I know, hey, look, listen, bunch of red folders on Wednesday during the time that I trade. I already know in the back of my mind, I'm not trading Wednesday, so I don't have to worry about that, right? So it does actually come in handy for convenience. So let's look at this calendar really quick and get into how it all that this works. It's very, very simple. It works just like any other calendar. So what you're going to see here is obviously you're going to see the hours or the time that these news events are going to be taking place on the specific day. So they give you the exact date and day right here to the left. The time is right next to that. And if you scoot over 2 more columns, you're going to see the actual currency pair that's going to be affected during that news event. Now, what I like to focus in on more than anything, guys, is this right here, is the folders. So if you're looking at the folders, yellow folders, as you guys can see on the screen, are low impact news. Orange folders are medium impact news, and red folders are high impact news. So high impact news is pretty much news that generally has a big effect on the currency pair overall. I personally, especially during the times that I trade, I like to stay away from high impact news, but there are a few times that you kind of look at the high impact news, and especially if you get better and better at doing this over time, you understand how it works. There are specific ways that you can kind of tap into this and start to trade it a little bit better. And it's not going to say that obviously it's going to be super consistent with the analysis, but trading is based off of probability. So as long as you're good at increasing that probability of you actually obviously clearing the trade, then you should have no problem trading these red folders. I'm going to jump into how to go ahead and get the information from these folders, so it's telling you exactly what the news event is about and which direction it should be going in. And then we're going to talk about pretty much how to go ahead and pair that with your actual trading style and how to trade it. So with each of these folders here, obviously we're coming into a new week. Today is Sunday. There's absolutely no news on Sunday. We're going into Monday, Tuesday, so on and so forth. I really don't trade Monday much, so we're going to jump straight to Tuesday. And as we can see here, we do have a few of these folders here. So there is a good amount of news that is going to be taking place on Tuesday. We have news at 10 a.m. We have major news at 9:30 p.m. continuing on throughout the night. And what you would pretty much want to do is that when you identify these news, so for example, at 9:30 p.m. we have AUD news coming in, 2 red folders. So there's 2 news events that's going to be taking place on the Australian dollar. What you're going to want to do is look at this folder, go straight to the right over here, and you're going to see another folder that you could pretty much open the details, and it'll drop down all the information for that news event. Now, this is actually really cool because, again, as a trader, the idea is that you want to be able to do this long term, right? And the more you start to do this, there's going to be news events that you kind of get acquainted with, and you can get better and better at trading it based off of, again, the forecast prediction of what might happen versus what actually happens. So just like, in the markets, patterns, we trade patterns and probability. It kind of goes the same with this news. Now, obviously, trading news is not as predictable, especially if you're not really into watching the news and keeping up with economic standings and all that other stuff. But you can actually look at this right here, and it will give you a good idea of what it is that you should be looking for. So it tells you exactly what the source of the news event is, the measures of it, the usual effect, which is good to take a look at, and I'm going to explain that right here. The frequency of the news event, which is, again, helping you gain that consistency. So as we can see, this right here, this news event, it says it's released quarterly about 25 days after the quarter ends. So you know that this comes in every quarter, just about a month or 25 days to be exact, after each quarter ends, you're going to get this news event. So again, we're talking about the consistency and kind of just, again, getting acquainted with the specific news event. The next release after this one that's coming up on Tuesday is going to be October 25th, and why traders should care. This is actually very important because as you're learning and developing the skill, becoming a trader, you're going to want to know stuff like this. So it says here, consumer prices account for the majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central banks to raise interest rates out of respect for the inflation containment mandate. So this is actually pertaining to banks, inflation, and the interest rates going up. So it's very important. Obviously, we know in the world that we live in today, inflation is going absolutely crazy. So you're going to want to get acquainted to this. You know, it happens quarterly, 25 days after the quarter ends. Now, moving over to the right hand side of the screen, this is where it gets more important. So you have your forecast that's going to be right here, and it's going to tell you how this news event has affected the market in the past. Now, obviously, if we were to close the drop down, there's no forecast here currently because this has not happened yet. But once we open it up, it'll tell you, okay, August 26th, January 24th, October 26th, it gives you the forecast of what happened before, and then more importantly, what actually happened in the market. Now, something to pay attention to, moving back over to the left, is going to be the usual effect. So if you look at the usual effects tab, it'll tell you the actual is usually greater than the forecast, which is good for currency, right? So what does that mean? It's telling you that the actual outcome is usually greater than the forecasted outcome. And if we're looking at history here, you guys see here on April 26th, the forecast was only 1.2%. And in reality, after the news event hit, it affected it 1.4%. If we're looking at January 24th, 0.7%, actual 1%, October 26th, 0.5%, the actual was 0.7%. And this happens on pretty much all of them. But now we know in the back of our minds that the usual effect of this news event tends to be greater than forecasted. So if we're looking at the current forecast of this, 1.5%, we know that typically the actual is greater, which means we can probably assume that when this event happens, it's actually going to be greater than 1.5%. Why? Because again, looking in the past, whenever we're trading, we always want to be able to look into the past to kind of predict what's going to happen in the future. Now, here's where it gets really good. What I would do is that if I'm trading these news events, and I see here Australian dollar, if you're a Tokyo trader, and you trade during Tokyo session, this is a 9:30 p.m. time, and I see here that usually this news event has a positive effect on the currency pair, then if I'm actually trading and I'm getting my confirmations and I'm looking for potential buys in the market, let's just say we're at support, we're getting some confirmations for a buy, whatever the case may be. If your technical analysis is telling you that you should be looking for buys, and then you're looking at what this news event typically does to the actual pair itself, and you see here in the past, we have more green, which means more positive effects to the currency than negative, then that kind of lines up to tell you, okay, this is a positive news event. It usually goes up. And then we're also getting our technical based analysis telling us we should be looking for buys as well. And you can kind of pair the two and two together to say, okay, let me see, once this news events drop, maybe get a candle confirmation of a bullish candle or something like that. And then go ahead, you see the market's pushing up, go ahead and place your trade. Now, on the flip side, why this is also very good to know or note is, let's just say, for example, my technical based analysis is actually telling me to start looking for sells. And I'm looking at the markets and everything is pushing for the selling side. But then I look at the news forecast and I see that typically this news usually has a positive effect on the currency. Then I know that they don't go together, and maybe, especially because it is a major news event, maybe I should just stay away from this currency pair altogether. So if you're a little bit confused and it's not yet making sense for you, let me simplify it and recap for you really quickly. If I'm looking at a news event and I see in the past that the actual effect of this event was positive on that currency pair, and I'm also looking for buys on that currency pair, then that could be an added confirmation to tell me, okay, this might be a strong push in the direction that I'm actually looking to trade. But on the flip side, if I am looking at the charts and everything is telling me to sell, and I come to a news event that's about to happen in a few minutes, and it's telling me that typically this has a negative effect on the currency pair, then I will more than likely not want to go ahead and place that trade. So I'll show you guys what that looks like. This is an example where we have more green, 1, 2, 3 greens, and only 1 red in the past. let's go ahead and look at another example where we may have more reds. Looking at the US dollar, we have news at New York session. So New York session around the time that I trade on Thursday, US dollar has some news going on right here. We look at this, and as you guys can see, there's a lot more red. So we have red, which is negative impacting news. There is more reds coming in than greens. So the frequency is released quarterly, about 30 days after the quarter ends. Why traders should know this? It's the broadcast measure of economic activity and the primary gauge of the economy's health. So that seems like some pretty important news to follow. Now, if we're on our charts and we're looking for a push to the downside, everything is confirming for us, everything is looking good, and then we come in and we see that this news event typically has a negative effect on the currency pair. This is USD. Then we should be looking for sells on all US dollar pairs. Now, as I always tell people, news events can be very unpredictable, which is why I tend to usually just stay away from major impact news. Whenever I see it on the charts, I just stay away from that currency pair altogether. And something like this will be a good example. Whereas we look at this pair, obviously USD on Thursday, there's 3 events that's going on around that New York session time frame. 3 events that's going on. If we're looking at this forecast wise, the first one here, negative, very negative impacting. The second one, all positive. So you see how it kind of contradicts itself a little bit. So it's all positive forecasted here, and then here we have negative again, so negative wins again. So looking at this, although overall you have more negative impact than positive, I mean, I personally just wouldn't really take that chance, because that positive could outweigh the negative, or even cause the markets to consolidate a little bit. So may not be the best area, the best place to trade. If you are going to trade it, I would say stick more towards times that you don't have a lot of news that's really going on during that time, or you do have 3 different events that's going on and they are all kind of correlating with each other. So all telling you negative or all telling you positive for the most part. So that's pretty much it for this video. Hopefully you guys enjoyed, learned just a little bit. And as always, trading is a skill. So this isn't something that you're just going to start doing and then right off the bat, you know, be super profitable, super consistent with it. You're going to have some consistency and get better with this over time. But if you guys did enjoy, make sure you go ahead and thumbs up the video if you haven't done so already. Hit that subscribe button with the notifications on. And until next time, guys, this is your boy Rico, aka RockStarrFX. I'm out. Peace. Feel just like a rock star.